Top 5 homeowners' options of avoiding foreclosure. Foreclosure occurs when a homeowner fails or defaults on their mortgage payments to the mortgage lender. If available, mortgage lenders can offer an alternatives payment plan and adjustment to interest rate on mortgage loans. Note: mortgage lenders can't file a notice of default on mortgage payment for 30 days or more. However, the process can vary from state to state according to your mortgage lender. Foreclosure: notice of sale will be given within 90 days. This varies from state to state. The mortgage lender can start selling the house at the auction within 21 days. If the property isn't sold at auction, property will become owned by REO, real estate owned property. When does the property become REO, real estate owned property? These properties are seized by lenders from people who have been delinquent or unable to pay their mortgage payment. REO that are owned by the bank will prepare to sell property. The mortgage lender will work with a broker to put the property for sale on the MLS, multiple listing service. If you know you will not be able to make the mortgage payment, please be sure to contact your mortgage lender to tell them your financial status. Mortgage lenders have options that are available to you as customers. Unforeseen events are going to occur at least once in your life. Don't hesitate to call or get in touch with the mortgage lender to go over your options. 1. Payment adjustment of mortgage. An unforeseen event happens to yourself or a close family member. For instance, expensive vehicle repair or high-cost medically emergency. Example: let's take your spouse, mother, father, or child who had a medical emergency. The unforeseen event may have caused you to miss a mortgage payment. The mortgage lender may be lenient in giving you an option to pay your mortgage in installments over the next 2 to 3 months, which may vary from state to state. 2. Deed in lieu of foreclosure. Deed in lieu of foreclosure is where the owner, the person who is responsible for paying the monthly mortgage, voluntarily turns over ownership of their home to the mortgage lender to cease the foreclosure process. However, this choice can help the homeowner avoid paying the remainder of the loan balance on the home. In certain circumstances, the mortgage lender still can collect payments even if you're out of the home. This may be funds that are owed other than the home's price value. 3. Interest adjustment to mortgage. If an owner is falling behind paying mortgage payments, the owners could make an interest adjustment to the mortgage. The homeowner needs to seek a mortgage lender to make modifications to the mortgage. This could help reduce the amount due monthly. Consequently, the modification process can become very difficult if the mortgage lender doesn't handle the documents and processing in a timely manner. 4. Short sale. When an owner, seller makes the choice of a short sale, the owner, seller is selling home less than the remainder on the mortgage. However, the owner, seller may damage their credit, but not as bad as having a foreclosure listed on your credit. The pro for buyer, real estate investor may have an advantage of buying a home at a discounted purchasing price. Another benefit to a buyer, real estate investor is access to equity in the home. In the future, you would have the ability to borrow against the property, perhaps using the funds for renovation and improvement expenses. Real estate investors may consider using the equity as leverage to lower mortgage costs. Maybe in a few years in future refinance the property to a lower interest rate. Real estate investors can also maximize their profits when selling the home in the future. The con for a buyer, real estate investor that may take interest in buying a short sale property is that it may be a fixer-up. The buyer, real estate investor may have to dedicate plenty of time and money in developing the property to a proper standard. Nevertheless, the funds you save from buying a discounted property can be used to have the property renovated by a contractor. 5. Getting approved for refinancing through hard money loan. In contrast, this should be your last result. Hard money loans are typically given by private investors or companies. These companies usually have high interest rates. Hard money companies don't have to report to credit bureaus. Hard money companies are set up for business purposes and make business transactions. The person that is applying for a hard money loan will have to verify payment history. The structure of a hard money loan is typically 12 months to 3 years with interest-only installment payments. This means the payee is only responsible for interest costs each month for the full completion or term of the loan. However, this approach may allow the homeowner to buy back the house and cease foreclosure. Now that you have been informed on top 5 homeowners' options avoiding foreclosure, This video should help homeowners with determining the right approach when faced with ceasing foreclosure. As far as being a real estate investor, buying short sale property can be a great choice when looking for properties at a discounted purchasing price. If you like the video, please give us a thumbs up below, comment below, and don't forget to subscribe for more fascinating videos.